In the previous activity, I mistakenly jumped the trading stock surplus account. Now, with the trading stock surplus, please note that it is income. And just like any other income, it will increase on the credit side and it will decrease on the debit side. I am going to write on the credit side because the contra account for trading stock surplus will be your trading stock. It comes from the general journal and trading stock surplus was 30,000. Because this is income, it will not have balance carried down. Instead, because it's the end of the year, we are going to close it off against profit or loss as per the general journal, and that amount will be 30,000. All right. Let's quickly move to classwork 2. In classwork 2, they told you that the company uses a profit markup of 30% on cost. Trading stock is 250,000. Consumable stores on hand on the 1st of March 2021 was 7,460. Under nominal accounts section, they gave you sales, they gave you cost of sales, they gave you debtors allowances and stationery. All of those, I will take them straight to the statement of profit or loss. But because I'm not only doing financial statements now, I'm also doing journals and the journal ledger. I'm just going to go through everything step by step. I will start with the journals first, the general journal first before I go into the general ledger, and then I will complete everything with the financial statements, which is the statement of profit or loss and the related notes to the financial statements. The first adjustment says that, before I even look at the first adjustment, because we had consumable stores on hand at the beginning of the year, I will record that immediately. The consumable store on hand is a current asset and it relates to the previous financial year. In the current financial year, that consumable store was a current asset in the previous financial year, and it cannot last up to the end of the current financial year, which is where we are right now. So that current asset must be expensed in the current financial year. And that's what the bookkeeper forgot to do. But you need to know what made that consumable stores. And you were told in this case that the consumable store was stationery. Okay, when you look at the last bullet point there, it says that 80% of stationery was used during the current financial year. Note that the bookkeeper forgot to reverse stationery on hand at the beginning of the year. So we know that that consumable stores relates to stationery. So I'm simply going to debit stationery because it's an expense. So that is what you are going to expense that asset to, and it'll be 7,416. And then you credit consumable stores on hand, which is 7,460. Stationery is an expense and consumable stores was a current asset. And now our consumable stores that we had from last year is no more. Now we have 0 as consumable stores. All right? Because the first thing that we needed to do was to reverse last year's consumable stores, which was consumable stores that were on hand last year, which was simply a current asset. And remember, as you use an asset, you should expense it. Okay. Now I can start with my adjustments. Starting with the first adjustment, this says that a debtor returned goods with a selling price of 6,500. As those goods were not ordered, This has not yet been put through. So we will put it through by recording it in the general journal. It is, obviously you can record this in the debtors allowances journal. It is a debtors allowance, and debtors allowances, it's similar to an expense, but though it reduces your sales. So anything that reduces income must increase on the debit side. That is why we are going to debit debtors allowances and credit debtors control, because it means that debtors are owing us less by the selling price. And I've included the reason why we're doing this. And then it affects 4 accounts. You're going to find the cost price of that 6,500 because they returned stock. It means we are going to have more stock. So basically, our stock is no longer sitting at 250,000. It will be sitting at 250,000 plus the cost price of these goods that were returned. How do you find the cost price? You are going to take the selling price, which is 6,500, multiply it by 100. The markup was 130. And that's how you will find the cost price. For more detailed explanation on this, please check out Data's journal, and only the one that focuses on calculating the cost price using the markup. I've got detailed explanations and you'll understand how I got to this. And when you do that calculation, you will get the cost price of 5,000. That is correct. And then you are going to reduce cost of sales, because those goods that when you sold them, you increased cost of sales on the debit side, but now your expense, which is cost of sales, must decrease. This is all about matching principle. And this is simply goods that were returned by the customer. Okay. Let's move to the next adjustment. In the next adjustments, they say during civil unrest, trading stock worth 50,000 was stolen. The insurance company will only pay 75%, but this has not yet been received. So we lost trading stock worth 50,000. So that 50,000 will be subtracted from the trading stock amount we have in the trial balance. Our actual loss will be that 50,000 times 25, because we are going to receive only 75%. Before I get there, I just want to record the closing transfer, where we are going to reduce by sales by the total debtors allowances amount, which is made up of 66,000 plus the 6,500, and that will give you 72,500. And then we get rid of the debtors allowances in total, and this will be your closing transfer. So all your debtors allowances will be transferred to sales. And this is the reason why. Then I can go to the loss. Loss due to theft, in this case, will be 25% multiplied by 50,000. And because it's a loss, it will be debited as expenses increase on the debit side. And that will be 12,500. The remaining 75% will be a current asset, which is insurance receivable. And our insurance receivable here will be 37,500. Trading stock will be reduced by the entire amount that we have lost, which was 50,000, as we are only going to recoup 75% of it. And this is trading stock lost due to theft. And here are details as to why we debited loss due to theft, why we debited the insurance receivable, and why we credited trading stock. All right. That's it about that. Now you need to understand at the moment, how much is our trading stock sitting at? It was 250,000. We got 5,000 that was returned to us by debtors. So we're gonna edit. Then we will simply subtract that 50,000 because we have lost the entire amount. At the moment, our trading stock is sitting at 205,000. Let's get to the next transaction. It says that the company donated stock to Pulusong Hospital. The entity forfeited 1,560 gross profit. No entry was made with respect to this transaction. Remember from what you learned in grade 10, donations must always be recorded at cost price. However, in this case, you were given the gross profit that has been forfeited. So you have to use that gross profit amount to calculate the actual cost price. Donations will be debited when you calculate the actual cost price. Because you were given the markup, it's what you want divided by what you have. The markup will be 30%. What we want is 100% of the gross profit amount of 1,560, and that will give us 5,200. What did we donate and what's happening to it? We donated trading stock, so our trading stock must decrease by that 5,200. So at the moment, our trading stock is sitting at 199,800. Okay. And it says stock count on the 28th of February 2022 revealed the following on hand. Which is 240,000. That prompts us to calculate whether we made a trading stock surplus or deficit. I'll start with my trading stock, which is the adjusted amount as per the trial balance. I've been going through that as we went through all the adjustments. Our trading stock is sitting at 199,800. And as per the stock count, it should be 240,000. And you realize that our trading stock needs to be adjusted up. When you adjust up, what you have in the trial balance is adjusted up. It results in a trading stock surplus, which will be 40,200. To record this, we are simply going to debit trading stock because our trading stock will be going up from 199,800 to 240,000. So assets increase on the debit side, and we have to recognize trading stock surplus, which is income. Income goes up on the credit side. Excuse me. And that's it. Let's check adjustments. When you look at adjustments, they told you, which is the last point, only 80% of stationery was used during the current financial year. Note that the bookkeeper forgot to reverse the stationery on hand at the beginning of the year. So we can't say the stationery that we have in the trial balance is the total stationery that we've got. So first you adjust before you allocate. Remember that rule. Adjust before you allocate. First of all, I know that I'm going to have to debit consumable stores on hand, which is the trading stock that's left. But they told us that out of all, which is consumable stores, which is your stationery that's left. Sorry for that. Out of all the stationery we've got, only 80% was used. You can't just say 80% of 12,540 was used. No, it is of all the stationery we have, all the stationery that is available for use, all the stationery that is available for use. In total, stationery available to be used is the one that we had from last year and the one that we purchased in the current year. The one that we had from last year is under the financial position section in the pre-adjustment trial balance, and it was 7,460. The one that we purchased, net purchases of stationery for the current year, it is the one that is given under nominal accounts section, which was 12,540. You add the two, and only 20% of that was not used because they told you that 80% of that was used. It means 20% was not used, and it should make up 100% of the stationery that we had available for use. So only 20% of that was not used. That's why we've got an asset which is created of 4,000, which is your consumable stores on hand. We are going to credit stationery because of all our expense. Only 20% of that was used, and we are going to credit it, which is 4,000 right. Okay, packing material and stationery on hand. Okay, in this case, it's only stationery on hand. Now, when it comes to trading stock, I'm just going to go through this quickly. Our balance of trading stock as per the trial balance was 250,000. It will be increased by goods that were returned, which is 5,000. The cost price of goods that were returned, it will normally go to DAJ, but in this case, I recorded it in the DJ, in the GJ, which is the general journal. And then loss due to theft in this case will be 12,500. Remember how we got that loss? It was the 50,000, and we multiplied that by 25%. That's how we got the 12,500. And we only receive the amount that will be receivable, reimbursed to us by the insurer, will be 37,500. When you add it, they'll give you 50,000. That is the total amount of stock that we have lost when you look at it. When you take 12,500 and add it with 37,500. It'll give you the total amount of stock we have lost, which is 50,000. It's just that it's divided into two accounts. Part of that will be lost forever. We'll never get it. It's a loss, and the other one will be reimbursed to us by the insurer. We will receive it as a payout, cash payout. But this cash payout has been delayed. We will only receive it next year. We lost stock due to donations, and the cost price of stock we donated was 5,200. And then you have to calculate trading stock surplus, which increases the value of stock we have in the trial balance from whatever it was, from 199,800 to 240,000, which becomes our balance carried down. This is the stock that we will start the new financial year with. So in the new financial year, our stock will be 240,000. Consumable stores on hand. Now, with consumable stores on hand, we had a balance from the beginning of the year, which was 7,460. We needed to reverse it right at the beginning of the year. Put it into stationery, which is an expense, and that'll be 7,460. But then we had left over unused stationery for the current year, which will increase our consumable stores on hand for the current year by 4,000. Remember, it was 0. Now it goes back to 4,000. It goes to 4,000, not back. It goes to 4,000, which is what's remaining in the current financial year. And that's what we will start the new financial year with. Debtors control, it was 50,000, but we had debtors that returned goods. So this will be reduced by the selling price of goods that we returned, which was 6,500. And then our debtors control left, those that still owe us and still have our goods, will be 43,500, which is 50,000 minus 6,500. And that will be our balance brought down for the new financial year. That's what we will start the new financial year with. Then we've got insurance receivable, which is an asset. So it will go up on the debit side, which is what is owed to us by the insurer. And that amount will be 37,500. And obviously this is an asset. It will have balance carried down. It will still be owed to us at the beginning of next year. Dark or blue, next year we must receive this 37,500. Sales, which is income. So it will be minus plus, it goes up on the credit side. Our balance for sales at the end of the year from trial balance, it is 500,000. It will be reduced by the total debtors allowances amount, which is 66,000 plus 6,500. I think that will give us how much? Let me just put the entire amount here. It'll give us 72,500 if I'm not mistaken. And when you take 500,000 minus that 72,500, it'll simply give us a balancing figure which will be taken to the trading account, and that'll be 427,500. Cost of sales, the balance taken from the trial balance, will be 250,000. It will be reduced by the cost price of goods that were returned. Remember, it only goes up when we sell. So when goods are returned, it will be reduced. This is an expense account. That's why it has a debit balance. So it's a plus minus. It's the inverse of sales. But whatever comes into this account must be at cost price. Whatever goes into sales must be at selling price. Remember that. So that will also, the balancing figure will also be closed off against trading account. That will be 245,000. Then we've got loss due to theft, which is obviously an expense, so it will increase on the debit side. This is what we will never get back due to stock that was stolen from our premises. And we will close this against profit or loss since it is the end of the financial year. All nominal accounts section will be closed against profit or loss except for sales and cost of sales. Donations, which is an expense account, is the cost price of goods that we donated, and that will be 5,200. And then we close it off against profit or loss as well. Trading stock surplus. Trading stock surplus, please note that this is income, so it's minus plus. It goes up on the credit side. It's made up of trading stock, obviously. We will close this income account against profit or loss since it's the end of the financial year. Stationery. I will start with what we have in the trial balance. We needed to add what we had at the beginning of the year because the bookkeeper did not do that, which will take our stationery to 40,000. But then we need to reduce that 40,000 by the 4,000, which is the stationery that was not used by the end of the financial year. And that will be 16,000 used up, okay? So you took trading stock, that is, you took consumable stores that you had in the trial balance, you add consumable stores from the beginning of the year, and then you minus consumable stores that was not used, which is 20% of this 20,000. Yes, I'm right. It's 20% of the 20,000. And the 80% will give you that 16,000, which is the actual expense. And that actual expense will be closed off against profit or loss. Let's prepare the statement of profit or loss. From sales, you minus debtors allowances from the trial balance, and you minus debtors allowances that you got from the adjustment, and that will give you 427,500. From cost of sales, you minus the cost price of goods that we returned as per the adjustment, and that will be 5,000, which is 6,500 times 100 divided by 135, and that will give you 245,000. Your gross profit will be your sales figure minus your cost of sales figure, and that will give you 182,000. Under other operating income, we've got trading stock surplus, which was 40,200. And I showed you how we got that 40,200. Note, you need to show all working within brackets because, guys, this is how they mark this. You get a mark for this, you get a mark for that, you get a mark for that. And you will also, sometimes when you're lucky, you get a mark for writing trading stock surplus. Guys, note that whatever comes under operating income or operating expenses, you can't put in trading stock because immediately when you put in trading stock and you leave out this word here, it's surplus. It's a foreign item, and a foreign item is worth -1. So you can't leave out the word surplus or deficit. You need to write trading stock surplus if it's income and trading stock deficit if it is an expense. If you leave out those words, guys, it's -1. Please do not make that mistake because when you talk about trading stock is an asset, and none of the assets and liabilities will come to the statement of profit or loss. It's not about the position here, it's about the performance. And when you look at the performance of a company, you only consider income earned and expenses incurred. Okay, obviously this will make up our operating income. and our operating income will be 40,200 since that's what we have. That's the only thing we've got. So when you take that 182,500 and you add it with the 40,200, it'll give you operating gross operating income of 222,700. And the expenses, you'll have donations, which is the cost price of goods that were donated, that is 5,200. Loss due to theft, no, that's not 2%, it's 25%. And it'll give you 12,500. And then for stationery, you take your total stationery, which is made up of 7,460 plus 12,540, that is 20,000, and you minus what was unused. And unused was going to be 20% of that 20,000, which is 4,000. That's why we minus in that 4,000. The reason why I highlighted it again is unused. You only minus the unused part. You take all the stationery that is available for use, you minus the one that is not used, that is unused, that we still have on hand. And we have it as consumable stores on hand, which is an expense. Now, in this case, your total amount will simply be 15,000, which is the stationery used. No, it should not be 15,000. It should be 16,000. When you add all these expenses, they will give you 33,700. You put it in brackets because it's your operating expense. Then you are going to take your gross operating income minus your operating expenses. You will be left with gross operating profit, and your gross operating profit will be 189,000. For your inventory, you will have trading stock as per stock count, which was 240,000. Then you'll have consumable stores on hand of 4,000, and that will give you 244,000. Trade and other receivables, we will have 50,000. Insurance receivable, that will be 40,200. In total, it'll give you 90,200. Once you have done this, speaking mostly to grade 10s to 12s, once you have done this, you shouldn't struggle when it comes to preparing the statement of profit or loss. Immediately when you see a transaction like this, you must just celebrate and make sure that you bring that 100 home. That's it. If you still don't understand this, go through all the videos again and make sure that you get it right. Okay. Just for me to test if you got it, please try this classwork. You pretty much do the same thing that we have done. And this is the question. All right. Try it out and send it to me on Google Classroom. I will actually post it there on Google Classroom. And yeah, just do this and send it to me. It should be complete. Then I will tell you how much you got and everything of the rest with respect to any adjustment that has to do with trading stock. Please don't forget to subscribe and click on notification and make sure that you watch all the videos that I've prepared when it comes to accounting. Thank you again for watching the channel. I really appreciate it. Check out more videos to follow. Koto.